So YouTube referred me to this Stacy Burke Trading. So I'm looking at this as from the standpoint of 100 pips and 50 pips. He's got them like the grids I'm using. So naturally, I agree with the guy on that easy math. Also, I think if you're trying to make 50 pips with a 25 pip stop, and you're trying to make 25 pips with a 50 pip stop, and on, where you have good bad ratios blended. And if you put your orders at the so-called institutional levels, is how he describes them. You know, this is the order block theory and all this stuff. At the extreme levels, and without even babysitting the market, you know, you could have these things pending. If you truly believe that's possible, that you could hit a price level and you could afford to buy a 50 pip window, I would say plop yourself 200K in there. So every quarter pip, you're buying a ticket. Each one has a different stop and a different exit. And the market spikes down there, and this guy's apparently wants to be in the market for like an hour. He just wants to make money at extreme levels. He doesn't actually say where he gets in and out. He doesn't even say whether he's getting in on limits or the market, so that's a little bit... He's not really trading in this video, but I agree with his view of the market. He's got boxes, I notice now. I've been doing these videos for a long time talking about the vacuum, the void, the box. And so the market, once it satisfies that, there's a whole trading range that develops in the next level. So the market goes up and it's chatter, 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 goes up, chatter, chatter, chatter. So in a drifty trend, the chatter would be the doji, and then it makes a move, then it pauses, makes a move. Now it may walk, and this guy describes it as coiling up for the explosion. Yeah, so the patience that takes to build a position, he doesn't call it that. But so this is pretty close to what I'm doing. The only difference is that if I think that we may spike into a 25 or a 50 pip window, I want to have pendings down there. And I want to have them last for X amount of time so I can figure, well, you know, if I'm going to go to sleep, I think my favorite time frame is 4 hours. So if I can't really sleep on 4 hours, I think so. Because I kind of want to check in on the market. You know, it's a little addicted to trading there. So I want to check in on the market, and 4 hours. I feel safe, very safe. Putting in big tickets and deeper is safe for 4 hours, because you're asking the market to drop, oh geez, 100 pips in 4 hours. Now, I want to run a couple robots, and these would be very slender robots. Like I'm talking about a robot that's, it might catch a couple trades a day. It might make $5 a day, right? So that the setting, the dial on that, and I do believe it's possible without any other programming than my the one robot I have, which is called Ticket Launch. If you're inside of all the files, I don't know if they're all there, but it's called Ticket Launch, and it just crudely throws out orders, you know. And it's, you know, it could have a little more dynamic component or a filter. It could have a filter where it's trying to just identify giant moves, and when it sees giant moves, it puts in super deep tickets, right? Same 8-hour frame, same 4-hour expiration. And if you're going to do that, then you can put the 6-hour robot on, because I don't want to go get, like, so it's about convenience, and you're trying to save yourself a lot of effort. So you're trying to make money by just using your mind, instead of like digging a ditch and climbing a ladder and all those fun things, you know, that keep you fit. Although, you know, you could be a big goober like that with a whale that took down some fat finger whale took down the market there in Britain. I hit the wrong button. You had hotkeys set up to go short of a zillion trades or something. But yeah, the round number thing, I do think this is a great way to think about $5 risk, $10 risk. Each ticket's going to cost you $5. If you don't mind risking $5 on a trade to make $10, and that would be double your money. This isn't any kind of greedy kind of thing that, you know, the mindless trading would do. You don't want to do that because, you know, better to just drop a rack in there. Just write a double click, because you'd have to be, I don't know. The robot's going to be better for that. If you're really a clinical forward tester, you're not a back tester. You just want to, oh, I just wrote this thing. Let's just run it. It's like saying, I won't play a song. I won't play music unless I know the song perfectly. Okay, you're never going to play. So you just have to go in. And the most simple, I'm talking to a person out there that I'm sure understands that you cannot avoid the risk. So if it's $5, that's a considerable stop. You could trade the euro dollar, and using just the good old fashioned, I got stopped out 4 times. And on the fourth, so if I had really tight ratios, I'm risking 20 pips to make 60 pips, and I put these tickets in, and I get stopped out twice, I can still make it back. I can still double my money because the other ratios are so incredible. But this guy says something to me that's very important. He says, and so I'm seeing we agree on this stuff, that he wants to get into a trade where the market will never come back there. It ain't never coming back there because it's a triple bottom. It's spiking down there. There's wicks. But what he doesn't say is that, can you handle that? Can you handle the market coming back to the starting gate 3 times? Are you going to hold a position and go, yeah, this is probably a triple bottom? I'd say better to accumulate on limits. Let the market come to you. If it doesn't, but it's down on the 4 hour. It's down on the 4 hour. Now it's down 80 pips in 4 hours. Now the robot, that doesn't even care about how deep the market is. So I've run a lot of tests on this robot. Come to think of it, I've run a lot of tests on this concept. Very clean. It's very linear. There's no judgment. It's a non-judgmental entry system. It has no bias. In fact, although I could set it to a bias, and it seems to perform better with a bias. The test I've run, now this is based on a market that is moving in a certain price pulse range. Maybe it jumps 200 pips, pulls back 100, up 100, back 100. It's moving so viciously, or it just goes into a void, which he doesn't describe on this thing. He's on a 15-minute chart. Oh, he's on a 1-minute chart. So he's looking for these setups where it just nicks the wick and it rips. So like the video I did last time with the euro, it's coming in, and it's just about to take out the low of last month. So it's September 30th. Oh my God, look at this thing, man. And at that point, it could fucking go down another 100 pips. So when the market really starts to just melt down, there is not one fucking, I've seen the yen. I'm telling you, 40 candles, 40 4-hour candles. This is 10 years ago. I'm buying into it in a nano lot. So I'm buying $300. And every 4 hours, I'm like, I have a few more of that. Dude, I blew up I lost $1,000 buying $300 worth of currency on this, with some broker. I'd really made a lot of money there too. I had to count up to like $2,000, and I buy this. Oh, it's out of Texas, IBFX out of Texas. That shows you how Texas was cutting edge. Now that I think about it, Texas was very forward thinking there. They had a Forex broker that 400 to 1 leverage out of Texas, United States. I could not believe. And then they got destroyed. They moved to Australia. Boom. Now they're probably in lockdown hell. But that was pretty cool. I was trading on a Windows phone, HTC. While driving my car, I had this trigger set to 300K. And every time the yen dropped, I go, give me some more of that. And I was like, shit. And I added the account, but I didn't make it back. But if you look at the wedge, I won't show it to you now, but go look at the yen 20 years back. 20 years till now. for the 10 years that I was looking at the chart, now I get down the last year of it going down, and then they coming out with a bank rate. So I was there during the actual 0 point, and then I remember when we came up to the top of this shelf, I thought, and I even knew it 9 years ago, I said, if we take that out, what's to stop this market from just, and then this is happening in the NASDAQ. The NASDAQ melted up. It didn't melt down, it melted up because all the way things are situated, that's just the way it went. And of course, the explosion of people jumping into, I guess, a copyright coin, which is a Bitcoin, is apparently like this, just this ledger that people want to, I guess they think that that's going to be worth something, when it really is just a peer-to-peer money transfer unit, right? In other words, if you're going to transact in it, apparently it keeps track of your transactions to verify that the actual funds are there. It's just really a verification process, isn't it? So it's just like it's just like our fiat money in a way. It's got the seal, it's got a serial number. It's the only one with that serial number. And what's the difference, right? How many $100 bills have the same serial number, right? But they can't print enough money to have that many coins. And I suppose you could go in for like $30 a Bitcoin. That's the minimal transaction. It's typically, you can't do anything under the, so if it's $40,000, $40 is the limit for a transaction in Bitcoin, some places. But the round number thing. So, yeah, being in these trades just where the market's not going to come back. And, yeah, he's in this fast trading. So I don't know how much he actually trades, or is he teaching? I don't even know. But I heard about this guy from somewhere. How old is this video?
I may be looking for a trade that penetrates a level. For example, the market may be pushing up towards 75 because it's clearing out stops or orders or breakout trades above 50 from a previous session, high or low, and it's accumulating volume above 50. So you may get filled at 67 for a short sell from 50 down to 00's, or from 50 to 50 in gold for a 100 pip move.
So he says
traders don't like to trade gold because it's more volatile. Maybe they're not comfortable with that, or their spreads are bigger. Pepperstone that I use, the broker that I use, the spread is very tight. But I have multiple markets set up that I think move well in not only perhaps maybe Pound Aussie. I'll look at Pound Aussie in the Asian opening session to see if one of those pairs build markets that are going to move and not come back. So there are
move and not come back. You know, it could come back actually, but I'm just interested in that dip.
Trends that traders can get into and get 50, 75 pips, and that may occur over 6 to 7 hours, and that's entirely your choice. I'm looking for a market that coils and explodes, and it may move 150 pips in 1 hour, as we saw in gold. They're trapping retail traders or building order flow for an explosive move, possibly in the opposite direction.
Now, people say that that's trapping the traders, and I guess this is the idea that people have buy stops there and they're trading that typical style. So every time you hear these descriptions of the market, all this language is based on, this is the ICT argument, all this is based on that, well, they're trapping people up there. Yeah, but they weren't trapping them when it was climbing the stairway. You wouldn't say that. Is it's building order flow? Yeah, okay, so it's a trend into a rip. So the coil is the trend, the drift, wave 4. But he doesn't even describe that, whether he's building, you know, what you're doing about that. So trap traders, you know, we've heard all this stuff before. News is the catalyst to make the thing spike, and you see it clear out the stop. So he sets a 50 pip grid here on the dashed line, and the solid is 100. So he's doing the same kind of thing. He's saying sell into this. Now, he does not say whether or not it's kind of always a disappointment that doesn't say how to even trade this thing.
For the other major instruments, obviously you may need to adjust it. We'll look at the NASDAQ, but this is just 100 and 250. That's quarter levels and 00's. And again, the middle hash line is my 50. So if we go back and look at the beginning of the week, and again, this what I love about this is that regardless if you're trading forward or trading backward, numbers are numbers. And we have 00's. So we head into Monday's session. We have a 50 level and a 00 level. Now, one of the things I commonly will do is I will draw a box above. If we're heading into Monday's session last week, we'll look at right through the week. The market's traded up into 50, and it's pushing into 50. It's pushing up into 50. It's working into the high. So I'm looking for sell setups from 50 down. The market came down and pinned up into 50, worked down and back up into the upper quarter. So again, trapping volume. These are visual things to look for. Volume is trapped in the upper quarter. We have obviously the previous day's low down at 75, and then the low of the week was down just above 50.
So right there, it's the big disappointment of the video is he does not say anything about how to make money on that. The other problem is you may not be trading the 10 pip trap, but there's a 10 pip grid inside of your 100 pip grid and your 50 pip grid and all that. So in a way, it's bullshit because you're just using the 100 to say, oh, I'm up 100 pips. Let's get out. I'm trying to make 100 pips with a 100 pip stop. I'm a break-even trader. That's my view of it. Does it really matter? No, I'm using it as a risk device. He's using it thinking that the market gives a shit about 100 pips. It doesn't. Or 50. It doesn't. If it did, it would turn on a dime at that price. So it's another fallacy. You want to believe this stuff? Yeah, he said what? If I did this, everything would be okay. And now it's going to be worser? Because now you're keeping track of me now? Oof, I don't like this story. I mean, I'm surprised he doesn't say, well, this is the top become about him here. You know, you got to get on this beautiful fucking hammer. God, this is right out of textbook shit right there. Look at his cute little dojis. I don't know what time frame it is. Oh, 15-minute chart something. I don't know, ridiculous. So he says, oh, it's coming to the 50. Dude, listen. Let me try to help him out. How about we just do a dumb shit trend line? Well, this is the institutional. This is they keep kind of trapping traders here, see, because you know us goobers, we put buy stops here. I'll buy right there. I'll buy. If it ticks that out, I'm in. Oh, they filled me. Thank God. You know what? I really like this trade. Let me put a buy stop here. Oh, look at. I got filled. Look at. I'm in an uptrend. Honey, look at. We're in an uptrend. I'm making money. I bought here. Bought new lows. I got in here. In this little trap. And actually, I scalped that wick and I held onto it. And then I added to it. But I didn't add on pullbacks down here. I added up here in the top. Chased it up there. Like a real goober. Then the institution came and snatched it all away from me. But it worked out here. Shit, I put a buy stop here, put a buy stop here, put a fucking buy stop here, and all along the way I was making money until I got this buy stop filled, and I was like, wah. Oh, gee. We're in an uptrend and everything's going so good. But notice it doesn't go to the 50. Oh, it touched, this guy, I can hear him right now. It goes to the 50, comes back to the 100. Dude, are you trading this shit? He's just talking about it. But I agree with his box. You know, I see this, but he's not doing anything about it. Went to the 25, pulled back, went to the 100. Yeah, did you just sell it for this? Are you buying here? What are you doing? I can't take it. These people kill me. Look at this fucking meltdown. We're probably taking out the lows from weeks ago. God knows, right? Here's the institution getting in here. And he's like, yeah, and then it takes out the low here. I'm like, yeah, no shit, dude. This is where you load the fucking wagon for a bounce to the floor that you just took out. It ain't about 50 pips. And you could say, well, look, that's right at the 100. Yeah, missed it by a few pips. Is it walking up a 25 pip grid? Well, I don't know. It just blew up 75, come back 25. I mean, are you babysitting this thing and pulling the trigger every fucking black candle? Well, you should be. Every black candle you should buy. If you think it's an uptrend, only buy black candles, okay? Don't put a buy stop. Don't be a fucking... Don't even put a buy stop on top of the fucking candle. If you're there, you buy the fucker when it tanks, right? So if you're going to buy every 15 minutes it tanks, buy. But why would you do that? You're coming into this... I got to believe, I haven't seen gold in a while, but I know gold got smashed to bits. And this drift up, this recovery doesn't even come back to the doji. Like it just came back to here, right? The fact that it makes it to here, the 75-yard line, you can't, it's not like that. And it's not like the institutional guys said, institutional order flow. Come on, man. That part I can't take, but he's like ICT in that regard. This is ridiculous.
So we have a low and we have a high. I'm looking at Thursday's low because Friday is an inside day. So that means that below 50 and above 50 is my 100 pip box on gold. Now, the reason why it's down here is because this is where institutional money stepped back in and brought it back up above 00's. The market has come down below 00's and created a swing.
No, dude, it's just liquid institutional. It's just, if you think the clearinghouse is the institution, if you think the brokers are the institutions, then yes, I suppose the people that are willing to, it's Forex, or it's gold for God's sakes. Does gold have a limit? Maybe it's $50 a day, $100 a day. You know, they think limits off. I think they still got limits on other stuff. Maybe they took them away. They were too dangerous. People get locked limit.
A higher swing low, which means there are orders sitting down below 75. If they
Okay, so let's put some orders down there. Why would you babysit that? And then he also starts out the video talking, you get how you time the market. Time it? You're pricing it. Who cares about time? Like if you got a sell limit up here, just think about it. You got a sell limit on top of this Williams fractal or this institutional reversal area. He talks about that later. You got a sell limit up there. Okay, where are you getting out? You're only going to make 50 pips, right? That one trade. Once it cuts up here, or are you going to babysit that? Oh, look, it's closing. I got a doji. Pull the trigger. I guess, if you like that. But it's obvious what's going to happen. Once this box is penetrated, it's going to pull back 25, maybe 50, actually a little bit better than 50. It's not exact. If I offset this grid by 12 pips, it will look the same. It will look exactly the same. You make the same arguments. Well, so what, this 100 pip window here? Okay, that's a high risk window. If you can't handle trading a 100 pip window, that's high risk, ain't it? So you fucking go broke if you got too many tickets in there, or too big a size per ticket.
They go through 75. My next area for institutional buying was
institutional buying. I can't stand it when people say that. Like, what does that have to do with trading? Well, the institutional... Dude, where's your trade? This guy still hasn't called it a fucking trade.
Below 50. So we come down, they form the W, they come down and clear out these orders.
I guess I do remember this guy. Yeah, they clear out these orders, but why aren't we getting in there?
And hit stops. They pull it back to 00's and then come back into that.
Dude, they were hitting stops here. Here's why this is bullshit. Dude, they're hitting stops here, here, right? They cleared that shit out. Yeah, sure, the total insane super deep, but on the way there, what do you think made this move so fast? It wasn't because they were anticipating the institutions down here. Because it's clear, it's just cutting through, and people that are selling into that, this is the problem is that when you do have a sell stop here, okay, cancel and replace breakout bot. When the market's coiled up, why isn't he getting in here? Why isn't he putting buy stops here? getting trapped on a couple, right? And sell stops here. Or why doesn't he just put sell stops in if he has a kind of a idea that this is the drift up? And you can watch this happening. Why isn't he getting in here? Or why isn't he selling every rally inside of everything under this wick floor? He talked about the 50. Why isn't he just saying, well, I sold here at the 50. I was building a position. I sold here. I was near the 50. I sold every rally. And then when I saw, oh, this is just the most beautiful, and I got sell stops here. Trailing. Cancel replace though. We don't have these stops pending. So the stop entry. If I saw market drifting, I would put a sell stop bot on, turn that bot on the market, and it's going to do cancel replace every hour, every half hour, every 2 hours. So if this is going to take 8 hours of drift, I don't know how long this time frame is, it's going to keep stacking, and it's going to martingale into this size-wise. It's stacking, cancel replace, and it gets up into about a 10 pip window, and some of these are scalps and some of these are big winners. So you have maybe a 10 pip win, an 8 pip win, and this is pure confirmation. Now you have to find a market that's drifting. And here you would have got trapped, but you would have made money. Now this is drifting. And maybe a scalp, you know you want to sell this. And right here you have nice smooth higher lows, never a lower, never a pullback. And this robot's going to finally, it has one task, and that's to trail a sell stop with a cancel replace. So dropping, and maybe you've got one here that's lingering. So you always want to have a window of, say, X like this trailing behind, and that's going to walk up there, right? So it's cancel replace. And here, it doesn't make a lot of money. But at the same time, you put sell limits in here, you're doing both strategies against the thing. So, because if you put sell limits up here and you're getting filled on this, and then you're trailing sell stop bot, you turn that on. Okay, he scalps. And here he gets paid heavily for this one strategy where cancel replace. Martingale's in, never a lower previous low. And he gets filled, so we scalp out. And all the long range tickets that got stopped out, and those would have to have tight stops, because you're going to have high ratios. You have 10 to 1, you have 8 to 1, you have 6 to 1, you have all good ratios. I would never run a bad ratio on a stop entry. It's got to get the fuck out. It cannot. So a 50 pip stop to make 25 pips is a limit order in my mind, because if you're going to trade the market spiking down and ripping back, you've got to get the hell out of that trade within the 12, 14, 19, 22 pips. Take it off the table. You're done. Now, if the robot, and it would be a robot because I ain't going to do that shit. I ain't going to double click that shit. But if I turn on my sell stop bot, and very easy to write that, I could do that in like an hour. I could write 10 of those bots and unleash them when I thought, shit, how's it? I thought, fucking batteries. Why is that thing about that? Jesus Christ. So that's not something I want to do. Although you can see it makes money, and if you know when to launch it. Oh gosh, we're drifting up. You know, put on the Goober bot. You know, and it's not good in a fast market. So if the market's ripping up, like here, this is insane, right? But we got sell limits on this. We got sell limits up here that never filled. I got sell limits in whatever pips it is. I only got the pip grid up there so I can have a visual idea of the overall volatility I'm dealing with. If I see the market at a glance is capable of dropping 300 pips in one day, it's not like it's going to hit 300 pips and turn around. And this is really harebrained shit. But so he is not even saying what he's doing on these things. So I don't know if this is theoretical guy or. And the same thing with the limit approach or the limit bot. But the limit bot's, if you knew the stop bot, like, so if you looked at your phone and you see, wow, I'm up on this trade, that's crazy. I would have never taken that fucking trade because I don't run stops. Well, let the robot do that dumb shit trade. Oh, that's not, it's making money. So one day I had a real money account and I was using it for the robot that I wrote. And I run that robot on 8 currency pairs. I go, let's just see what happens. And I'm trading shit I would never trade. Like, I'm looking at my phone. I'm like, damn, I'm up like fucking $13 on this 4K because on these crazy markets, you know. And it's the same robot running across every currency pair. And the really big movers have a wide spread, so they're giant swing trades in a way. And it was dropping them every 4 hours, I think. So the exposure there. Now, if you're going to trade that in the background, or even think of the market like that, but I wouldn't want to do I wouldn't want to keep hitting a double click is what you'd have to have, because you're going to have to pick, like, well, how many pips do you want to start selling at from the, like, on the delta of the current price? How far away from? Do you want to get filled 10 pips above, 10 pips below? If you want to get filled 10 pips below where the price is now, so the market's drifting up and you're going to put a sell stop in 10 pips below, you're only going to get filled if the market comes unraveled and just smashes down and never looks back either. Because if it spikes down, they're going to trap you on those. But those inherently have to have big targets because you're getting such a shitty fill to make up for it. You got to try to make 80, 50 pips on that. On that idea of trailing a 10 pip deep sell stop, while you're in the threshold of gooberism there, it's better to put in your sell stop as tight as at least 5 pips. I would say in a market that has a tight spread. Now, in a market that has a wide spread, you're just going to get chopped to death on that technique. So it's better to trade limits with bad spreads because you can take advantage of a spike, which those are more probable actually than on the end of a trend. So since trends are so rare, or drifty trends that just happen to fit your 3 pips away, 4 pips away, 5. So in one script, one robot's capable of dropping different sell stop entries. So one robot's going to put in a 5K at 2, 3, 4, 5, 6 pips, you know. 8 at the outside, maybe. Now the 8 one's going to be the wider stop just to keep things fair, and the tighter stop's going to be the scalp. If you want to keep the ratios the same. But it's about knowing when to turn that thing on. Because you're going through a certain phase, so we're going to turn that thing on, right? It's going to do that. Let's see, the other thing is, there's a lot going on in this chart. Like I said, this guy, why does this guy bother? You know, the same low of the previous day shows up on the 4-hour chart too. So this guy wants to be in the market for an hour and shit. He's scalping or sniping the market. But like I said, I don't see him trading here. He's not calling out any entries like, this is what we did here, and then we did this, and that was crazy, and then we got some hookers, and now we're drunk.
That buying level and immediately pull away and start to
Plus, I'm not sure about this
before we come into our next session.
I'm not sure we got this accent. I think he's renting it.
So coming across, they come up through that level through 50. This is a trend trade up through 50. So again, there's a distinct difference.
Again. But why isn't he riding that trend, man? That's a great... You should be able to see that. I think he's on the 15-minute chart.
Coming back to understanding what the behavior of price is like at these levels.
And this is the ICT view of the market, too.
this is the high of the day, but we're inside of a U.S. session high-low. And you'll look from last Friday, this reversal trade was institutional selling from inside of the 00
That's an order block
orders.
there, son. It's an order block
Came
there.
up into that 00 area for selling inside of a peak formation.
See, he just said the 00 area. So he's talking about a 100 pip window here. Dude, this is bullshit. You know, it's just silliness. It is so silly. Institution trading here. Well, where'd you get in, dude? Fuck. Where did you get into this trade? And this is a 100 pip window. So it went 75 pips to a 100 pip window. Then you're not trading at 150 pips. He claimed the round numbers meant something, but now it's bullshit.
Which again, you'll notice was above the high into 50. So,
yeah, into the 50 pip window. Did you sell up there? Dude, what is the point of this video?
we had a high. They
We
created
had a high, and then we had a low. And my name is Stacy Burke, trading. Trading major round numbers. In your mind.
the high, which if we come back to the left, we can see the New York session started down underneath the 00's. They've come up above that and made a high of the day and gone back up.
Also, this is when New York opened here. This is his argument, the why the market drifted. Well, we had to come back to New York, so
Inside of 50 for institutional selling positions, and obviously triggering your breakout traders, hitting stops, whatever you want to call it, getting liquidity, doesn't matter. I'm emphasizing.
well, it does matter, and I don't know what he's talking about because, dude, like, this is just, I mean, there's so many places to get in on that trade. Tell us.
Emphasizing the importance of 50s and 00's. Everything inside of this is either in the middle of the move or you're caught in no man's land and it's a 50-50 situation. If you're long on the way up and you recognize that this is an all-in long situation back to the lower highs, if they go through this, the next area of institutional selling is up at 00's. And again, we see the same behavior occur into the U.S. session. We have institutional selling above 00's.
Yeah, but past the 50-yard line.
We have institutional buying below 50 in a day that's trending back up. They've locked in the peak.
Dude, he doesn't understand it's an auction. So it's not about that number at all. It has nothing to do with it. It's this. Actually, it's all of this. As soon as this caves in, you buy that. So you martingale in, you got a 1K, 2K, 3K, 4K, 5K, 6K. You don't know. They might come all the way back down to some wackadoodle price. How do you explain this move? Well, it came to here and then... Yeah, it's not a top buy institutional. It has come back to starting gate. Not always. It's just not like that. You can't just go zip zap zing zong and just describe this. Is not life. This guy's just fantasy world, man. Life's not like that. Sweet spot. He's got the sweet spot. For what? He doesn't even trade this shit. Sweet spot.
Formation low. They've taken out the high of the day. They've breakout pullback.
Well, did you get in at the retest of the Asian session? I'm assuming this is Asia here. I don't know what the guy's talking.
Go up into the stops. Trigger breakout traders.
How do you know that? People might have stops down here. Or they might have got into the. They've had trailing stop on the top of a 15-minute chart. Why do you think people have stops here? It's so silly to talk.
U.S. session equity market open. They come down, pin the first mouse, put heat on the first mouse, and then resume.
Put heat on the first mouse?
The original upward trend.
Okay, he's lost me.
So we can walk through the rest of the whole week and see the same behaviors, but I want to show some examples again of geometrical patterns. So we have a peak formation high from the end of the session on the Wednesday night after the Fed. We have 3 pins hitting stops into 50 So again,
why does he think they have stops there, dude? You mean they're short and they got buy stops to protect the bearish positions, or are they going buy stop to go long because they're bullish on this drift up?
going up.
They're the trapping traders, which I understand trap traders, but the reason the market, and this is a perfect example, the sell stop bot would just really do well under these conditions of course, you'd have to turn it on. You'd have to say, well, look at this. I got long at this. He doesn't describe this entry. Apparently he missed this. Where you nick the wick. And plus, look how hard, and 15-minute down hard. So if it's down hard in 15 minutes, I would buy, and I'd probably have to cash out of this on the bounce. The dead cat bounce never makes it back to the floor, and this wick doesn't mean anything. And then here comes Asia, I think. And the way he's saying it. I always buy new lows in Asia. So I'm long, regardless of that stuff, long cash out into the floor. So this would be where I would get it out just because, or I'm not going to wait for that. I'm just going to get out here. But that's all pre-programmed in. Then there's another opportunity to buy, and it's down hard on the 15. And if you're babysitting it, you would pull that trigger. Plus, you're getting filled because I put buy limits in this void here. So I want to gobble up that mini void and build a position here. And then when it rips, so he talks about the explosive move, although he doesn't tell you how to trade it. I can tell you, you have to really buy into these mini plunges. If you're expecting this to happen, oof, yeah, the coiling up. Okay, so this is compression. There's a big void in here itching to be explored, and of course we don't know how far it's going to push it, right? I would be taking profits there automatically because it just goes into my targets that are pre-laid out in a grid without regard to the 1500. I just have them scattered like a blanket. I have a blanket of targets, and I have a blanket of limit entries, and a blanket of stops. So just tons of orders in there. And this thing, of course, if the robot's doing cancel replaces and putting on a big position, and it's set up to make 100, looks like about 300 pips a here, man, it gets loaded up there, and you wish you had more of those robots running. It's cashed out, scalped, and maybe it doesn't even see this target because you got set to make 150, and it misses out on this. And of course, once it goes through this floor, there is no guarantee of any kind that it's going to come back. And this is the kind of why he's not probably going to tell you in the future what he thinks is going to happen. Because if I said, well, let's put some buy limits in here, and I don't know how deep back in time this hole goes. If this is a 3-year low, I would say you better put your tickets in like this. And you better make sure these tickets only last an hour. So in a fast market, if it starts dropping like a rock, your sell robot gets filled, and now you're short, and you go, well, I want to start getting long on limits. So turn on a limit bot. Honey, turn on a limit bot. And so limit bot comes in, and since it's coming so fast, you have to turn on the deep limit bot, and it's called I got one called deep swing bot, deep state bot, and it comes in like this. Now it's doing it for you. It's going to do what I would do. And so I'm testing my trading strategies that, and of course it's stacking up. So if I tell it drop every 1 hour, I want you to drop a rack. And I would actually have tickets that are 300 pips deep that probably won't get filled, but we never know. And inside of this robot, since I can set up unique targets, and I can create a situation where, say we did buy every 25 pips, and that's all I'm using it for. I'm not using it thinking the market has any respect for these prices. This is a ridiculous concept. Random lines line up just as well as round numbers. But, because it never hits the 100. I never got it filled. I had my order sitting at the 100. God damn it. I put a buy limit down here. God damn it. So you got to be committed to buy, and I'm just using it for reference of 50 pips. So you could just as well buy a 100 pip window. Put your buy limits in here. You get filled on the top. Okay, not bad. And maybe you got a scalp built in to make 25 pips. But maybe you don't. And then you go, okay, we're coming back. So there's nothing more relaxing in a way of just knowing that. But you have to realize that if this low goes back 3 or 4 months, that if we take that out, it could just be the biggest bloodbath. And if you start doing buy here, buy big, buy deep, actually more tickets down here and less tickets on top. But actually, say you think it's going to drop more than that, so underestimate your. The market goes further than most people think it could go, right? Because after this, people are saying, well, fuck, shouldn't it come back to here? You know what? Not quite. There's still, when you take this wick out here, you don't quite make it back to there. Now, this gap open coming in because the gold market closes for a little bit, I think. 2 hours or something. And then this guy gets tight spreads. Yeah, well, you just, look, if you're long into that, and he's claiming, though, this is the low, the weak and stuff, it's like, dude, seriously, are you buying it? And how many tickets do you go? How big? How is these trades he's doing? There's another classic sell stop drift bot gets filled. Ba-bam, nice cleanup on that. Cleanup by L5, and you didn't have to be there for it. Amazing. But by the same token, you got a buy limit on this low, buy limit on this. So supposedly taking all the guys that are going short here on stops, right? I put my sell stop right there and right there and right there, and I'm selling into this. I'm making so much money, and then oh geez, it came all the way back to my entry. That's crazy. Well, how did that happen again? Yeah, so there's that guy, right? If you put sell stops in here and here and here, then you're a true goober, right? 15-minute chart. I got you. Yeah, you're doing good. Like you're up on this trade, and now you're adding, you're pyramiding in. I got you. You're doing good. You're martingaling into like the end of the road. So, isn't it better to just say, you know what? I'm not long this thing unless I babysit it to keep getting in this drifty train, buy and then cash out, buy, cash out. Or I simply have buy limits, sell limits in here. And the market's telling you how many tickets to put in, where to put them in. Ignore this guy for the 100 pip grid. Like I said, if you look at that, I've looked at these things for hours, probably more than this guy. And I'll tell you what, there is no fucking correlation to 150. It's just a round number to do the math. It's just a visual at a glance. But I have my round numbers up. I do, but I'm not using like this guy is. It's harebrained stuff. I'd rather look at this bottom becoming a top here, and it doesn't even happen in any fucking 50 or 100 yard line. Well, it's an order block because ICT doesn't use a grid either, Oh, the buy stop bot, same idea. The buy stop bot's running. Buy stop, buy stop, buy stop. Goober wins, right? Cancel replays, tight buy stops. Not a fucking buy stop here. Well, fuck no. When it comes up here, the sellers come in, right? We don't want to put our buy stop here, even though, look, you're right. You're right. Look, I got filled and we're long. Then I put a buy stop here and I put a buy stop here, and I was like, well, this is so good. I like this strategy. You just put a buy stop here and never cancel it? Yeah, because, dude, if it takes us... Now, I know people that do this, and I'm like, dude, have you thought about cancel replays? You got to put the buy stop here now. If you really think confirmation's a real thing, buy stop. If you think vaccines work, right? Buy stop, buy stop. Well, buy stop works better than that. But it is the death of you, right? Because you get spiked. Spike protein, you get filled, and next thing you're fucked, right? Same thing with the sell stop bot. If you don't turn this thing off, he's got sell stops, he's making money, he gets filled, he's making money, but then he's getting sell stopped entry and then rip his face off. That's how the sell stop bot is going to get destroyed. And he'll make it back here, but it's a diminishing return, because if that one robot, you turn on the wrong robot. That's why the 15-minute chart is a little bit ridiculous. I'm just using it because he's on it. The 1 hour chart is going to be less trading and better setups. You could actually use RSI. Oh, the Dirty Dozen indicator, for God's sakes. So a lot of this stuff is in this guy's mind.
Hitting the stops.
Hitting the stops.
Going up into an institutional selling
Institutional
area.
waterfall.
How do we know it's institutional selling? Because they've pinned up through the high. They've gone up a second time and then a third time and come back down.
You notice he didn't say about it respecting the 50 because it went almost to the 70. It went to the 70 pip.
And come underneath inside of a peak formation. This is what a high of the day looks like after they've hit stops. We have our lower swing low in the middle structure, and then our engulfment.
I can't take it. Anyways, let me see. Did I get any further in this video? That rectangle kind of triggered me. I thought that was right. So he's got these boxes, but he's not doing anything about it. He doesn't call it one trade. I sold here. I got in here on a limit. Here we just got in because we were drunk. Well, he doesn't talk about anything, man. That's part of it. You got to pay for that, son. It costs extra.
Session, and they trade into it, and they make a high of the day.
And you sold it, right? And it kept going on higher, so I sold more because I had a grid of limits in a 25 pip window because I'm just a goober. So I'm a goober limit seller, I guess. I put my orders up here in this box, see? And I got short in this big ass fucking box. And when the market tumbled, I cashed out. I have buy limits to start here. Buy limit, buy limit, buy limit, buy limit. Buy limit never got filled. So I bought this whole giant void on limits. This one became a winner eventually if I didn't get stopped out. This is a bigger ticket. This is me. I'm not doing martingale like 2468. I'm going 1K, 2K, 3K, 4K, right, for starters. Now in the real world, for me, I'm just putting in 1Ks. All the way down, I got a bunch of complex shit going on here. Some of these are going to be ideally cashing out just by happen chance. We don't know how this bounce is going to look. It could come ripping back. It could stab a little bit lower. It could do a doji and then rip back. Right? These are screaming moves into this 75-yard line. So, but it's above a 70. It's 80. It's an 80 grid. Don't ever think the market's going to come. It doesn't give a fuck about the round numbers. This is ridiculous what he's saying. Look, it came to the round number. Dude, no, I'm sorry. It came up, it grabbed that, and it's already pulled back to the structure that just happens to be almost at the 25-yard line. Plus, there's this low, right? The original floor that we took out, it makes it all the way back there. I don't know. Maybe I'm just too critical, but like I can't fucking deal with people that aren't going to even if it's a fake account. Just tell us. You got to see ICT's last video. He just posted a couple of days ago. He's playing this music. It says "To John," and I'm watching it going, what is he doing? He's putting on trades that I can't even tell what size he's trading. He's on some. It's called a paper trading account or something, paperforex.com, and I'm like, well, I don't even care if it's a fake account, but for God's sakes, man. You're just playing music, and you think that we're supposed to understand what this trade is, and you blow your mind. And then he's in the middle of the trade, and all of a sudden the screen just disappears, and something else shows up, and I'm like, where the fuck are we now? Like the whole screen changes. I'm like, really? I mean, I've paused my video for 10 minutes and come back in a live trade and said, yeah, okay, we're here now. You know, I'll come back every half hour. Go, we're here now. It's half hour. No clock on his screen. We can't tell where he's at.
You go back up into that high and pin into it, and then they come back up a third time and pin into it above 50 to 75 with a higher low, forming our M structure with an engulfment pin hammer but we also now have a quarter of trapped volume up high.
He doesn't going to call out one fucking trade. It's just ridiculous. Why can't he just tell us?
Without, hammering this issue home, specifically looking at the U.S. session, the yellow box.
I can't take it. Anyways, this guy, it's just Gooberville all day long. Stacy Burke. I suppose he's a nice guy. God knows.